that the long-term picture, it hasn't changed at all. And really, the fundamentals have actually never looked better. Now, before we get to the fundamentals, let's stay on Buffett just for one more second, because understanding how he thinks, how he became one of the wealthiest men in the world, is something that we should all learn from. And I know he's not a big Bitcoin fan, but we can still learn from him. Now, Buffett never buys something and then sits there staring at the price every day. He said over and over, he doesn't care what the price does today or tomorrow, because he's not buying the ticker, right? He's not buying the price. He's buying the business. And if the business is getting stronger and the price is falling, then he doesn't panic. He just buys more. Okay, so before we get emotional about, the red candles, before we get emotional about the headlines, what we want to do is we want to do exactly what Warren Buffett would do. We want to zoom out, just ignore the noise for a second, and let's get to the facts. Because the facts, they paint a completely different picture than the emotions do. Okay, so now that we've got the right frame of mind, let's go straight into the first big question. Why is the price falling? Like, what happened? Now, before we get into the market makers and the forced selling and all that, we have to start with something way bigger than Bitcoin, something that affects every asset on earth, and it's liquidity. Because when liquidity disappears, it doesn't matter how strong the fundamentals are. It doesn't matter how much demand there is. Everything gets hit. And that's exactly what's been happening over the last 6 to 8 weeks. Now, the first thing most people missed is that the US government went through the longest shutdown in American history, 43 days. And when the government shuts down, spending freezes. The Treasury General Account, the TGA, it's the government's checking account, swells up, and all that money that swells into it comes out of the system. And of course, every time the TGA jumps, you see risk assets start to pull back, because the liquidity is getting drained from the exact places the markets rely on for the day-to-day funding. Now, on top of that, the Federal Reserve, they're still running QT, or quantitative tightening. So while the shutdown froze fiscal spending, QT was pulling reserves out of the banking system. And if you watch the bank reserve levels, you can see the floor getting hit pretty quickly. Now, this isn't a guess, right? It's all in the data. Reserves fell back to the same danger zone we reached in 2019, right before the repo market blew out. And while that's happening, the reverse repo facility, it's basically empty, which is another major signal that the system is getting tight. Now, the reverse repo dropping to near zero means money market funds have nowhere to park excess cash, because no excess cash. Overnight borrowing costs between banks have been creeping higher and higher and higher for weeks. Dealers are pulling back risk. Leverage is coming down across the board. So when all this happens, you get a temporary, I say temporary,